Hi, good afternoon. How you doing? This is FUTUREFX Academy once again. Yeah, without wasting much of our time, I want to thank you for following this video and also for those who have keep their time in the course of trying to make a better person in life, trying to have alternative source of income. I really want to tell you that you are on the right track. The only thing you need is the energy to keep it up, to always come back and watch videos, bring your friends. There's no crime in having additional source of income. There is no crime in, making yourself a better person, adding values to yourself. Because if you get to a stage whereby you too you'll be adding values to people, irrespective of a profession, you use it to empower people, to help people. So what am I trying to say is that you should not give up. Invite your friends. Let us win this game together. Let us be successful together. Let's do it together. You understand? So that's what I'm trying to say. So today, our today's day is 25th of July. So Sunday, what I'm doing right now is a review on what to happen in the coming week. Be looking at the market generally and see what currency pair is ready for trade ahead of next week. And I'll be taking it, which is not going to just be a review alone, but a kind of additional knowledge to what you already have in the course of learning how to trade. If you remember, I said when you are doing your analysis, the first thing you need to know is to look at the market trend. What is the current trend of the market? Two, you do your analysis on higher time frame. Three, you consider you are trading price action, you look at the new price level. You check your higher highs, your higher lows. Four, you make use of your uh candlestick chart pattern, your Japanese candlestick material, which I shared with you. And if you don't have, you can Google it or private chat me. I forward the file to you. Make use of your Japanese candlestick chart pattern to spot possible move on the higher time frame ahead of the week. So right now, one additional thing I normally do is if I'm trading USD pair, so I make use of dollar index. So this dollar index can give you idea on what will happen on every dollar pair currency. So let's go. I'm going to change my time frame to daily, then adjust my chart. I want to see the general view of the market. So this is the XY, the XY on daily time frame is showing a buy direction, and with what we have here, I still expect more buy on the XY. You know why? I put this block here for purpose of price action, which at any point in time when DXY come around this area, I can take a sell advantage. So based on what I have here, DXY is yet to come to this price level, which means I still expect more buy on DXY. And if I'm doing that, there are several other conditions I need to use to back it up. You understand? There are other factors to consider. Another thing I need to consider is my candlestick chart pattern. Look at this particular candle for on the 22nd of July. This candle happens to be a doji. And usually when I have a doji like this, doji is a candlestick that show indecisions. Meanwhile, it depends on the particular side of the candle where the little body falls on. So this particular doji candle, the little part of the body fall at the top. But I want to confirm if it reach the condition of my Fibonacci. So I check the Fibonacci retracement of the doji. Does it fall inside 0.382? Yes. The body fall inside the red line. The red line of my Fibonacci ratio is the 0.382, or you call it 38.2%. Now, for the last trade, this guy indicates that the pressure is on buy. That's what it indicated, and the outcome is what we have on the 23rd. So there was actually a buy on the 23rd. So if you have traded DXY on the 23rd, this candle on the 22nd has given us idea that there is still much buy pressure on DXY. That's the dollar index. Meanwhile, tomorrow will be 26, and with what we have here, the structure of the last three candles, is giving us a evening star. So an evening star is the formation of three candles. It depends on the position. Normally, this candle usually form. You look at it when market is down and it's looking for a sell. But for the sake of Monday, the last candle still shows that this is a bullish candle it makes effort to buy more. Though there is a rejection, which is the reason why we have this week. But if you measure it with Fibonacci, we see that it does not conform to what we call the 0.38 extension. The body is bigger, so which shows more pressure on the buy, and you cannot call it a doji. So with this, I'm expecting, I believe what happened from around 93.172 down to 92.511 is a pullback. So I expect the buy to continue that tomorrow. So let's look at it on 4 hours time frame. You look at it, looking at my indicator, you will see that the breakout here happens to be a fake out. Happens to be a fake out. And if you draw this channel, okay, if you draw this channel, you see that it didn't break this buy trend channel. It didn't break this buy trend channel. It didn't break this buy trend channel. And if it is here, we place the channel. But when you are drawing channel, the most important thing you need to know is that when channel break, does it give you body or a wick? Because it just ran the test here and return immediately. So this channel have not been broken, and currently is on a buy. So it's possible that taking this area as another support level, that's around 92.792. So you can wait for the market to come here, or you put an order block. You put an order block somewhere around there. So if market comes to this area, let it trigger a buy order for you, and there's a buy limit. Then join the market. We're expecting the market by calculation, if anything will happen at all, putting our TP somewhere around here. Though to be on the safer side, sometimes some trader will use the next support as their take profit, because when they get to this support area, it might encounter, it will even encounter some sell order, but the pressure might not be much, because here is the main sell order. This is where people are looking at. So we see this as a pullback. So there's higher possibilities that when it's moving, it's going to break this immediately, then continue. But if it does not, when it gets to this area of 93.168, it might be a little retracement again to balance market, then continue. So we look at this And what is the implication of this on currency pair that has dollar? This means if this market continue to buy, this is showing a great momentum on US dollar. And if that happen, there will be a reverse on every currency pair on dollar. If your US dollar is your base currency, you understand? That means, let's say uh, USD JPY. That means USD JPY will keep buying. And if it's on Euro USD, Euro USD will keep selling. If it's this GBP USD, GBP USD will also sell. You understand? So that is the logic. You capitalizing on the XY to trade. You understand? And in a situation whereby GBP is also strong, as at when dollar is strong, there won't be much movement. So it can be very slow. That's when the market will not be doing well. Meanwhile, this is just one part. So if you are trading DXY alone, and you are trading DXY alone, probably your broker allows DXY on its MT4. That means you can trade DXY, just place your buy order here, and when it trigger it continues to buy. You understand? Continues to buy. So that is it for. So with this now, I want to believe we've covered every form of US dollar pair. Meanwhile, you can still go ahead to check on other currency pair. Now look at what happened here. This was analysis I did, started from somewhere around there. I did analysis somewhere around there. So I was expecting market to come to this area before I sell. You can see what happened. When market came to this area, it sell. And from there, it's been selling in a channel. So at this point, it broke this channel and trade above the channel. But what you are seeing here, this is typically a ranging market. This is typically a ranging market. And when you have a ranging market, what you do normally is you put your box and monitor the market movement. Anytime, any day, market break the channel, do what? You buy. So with what we have here, this guy break the market, and what we have here is a sell. But after this sell, look at what happened. So sometimes your analysis might not work as planned. And I'll repeat it, that's the reason why the importance of stop loss is key. You don't joke with your stop loss. Look at what happened. I place a buy order here. This is a daily time frame. I trade my price action. Anytime, any day, I don't wait for a return candle. I didn't wait for a return candle because I've noticed that oftentimes when markets reach a new price level, technically there are always other block generally, which as markets get to that price level, so many other block will be triggered and there will be a buy. Well, some people will now ask that why did it now fail at times? Yes, it failed at times. Why? Is because sometimes it's always coincident that when market is approaching this area, don't forget you are not the technical trader are not the only trader in the financial industry. So we have those that trade the news, those that trade the news, and we have technical. And if as at the time market is approaching this price level was when news came in that favors the market for a sell. The momentum will be great. The momentum will be great. So, and fundamental traders, they trade news, like I said, basically. So when they trade finish, what happen? They cash out their money and the market balance back. And that was the reason why, even despite this long pullback or this long downside, it returned. Can you see? It returned and take the direction as predicted by this analysis. So that is the reason why analysis fails most times. It fails most times because not because your analysis was wrong, but because you are not the only one in the market. Your strategy is not the only strategy in the market. You understand? So anytime, any day, things like this happen. So the only thing that will prevent you from making huge losses is when you put your stop loss. Now looking at this analysis now, this analysis is still valid. You know why? It might have eaten your stop loss, you have make losses here. You understand? But in this area now, the market structure has changed. There was a support here which give birth to this buy before the sell continue. So we are expecting this trade to come here then buy, but the momentum pull it down to break the zone. And so if your stop loss is somewhere around there, it will eat you out and continue the buy. But let's assume that when you have your support here and you have your buy order here, and you look for the next support to place your stop loss. You understand? You would have been on a safer side. But if you are not somewhere around there, the market will eat you out. But let's assume that based on your account size, where your stop loss can comfortably stay is somewhere around there, because you didn't expect the market to come here. Based on analysis, you expect to come here then buy, and you place your stop loss below it. You understand? It will eat you out, but it won't pain you, it won't really affect you. Why? Is because you've done your calculation and is what you can afford to lose that you put in the market. You understand? That's the reason why it's not just a review, but also additional knowledge to whoever that is just learning how to trade. So with what we have here now, the perfect way to place a support after you have spot your buy area is to place your stop loss below and the next support level, which is somewhere around there. You understand? You place your support somewhere around there, not here. Here is the next support. This is the main support you are considering to place your trade, and you place your support here. So this is a guide that when you choose this area as your support zone, as your stop loss, and you look at where you put your buy order between here and here, based on your account size, can it hold your account? If this support, your stop loss, is too much for your account, that's a signal that you don't belong to trade around here. Don't belong. You're not supposed to trade here. You have to, because based on your, like some people, they normally use like 40 pips stop loss. Based on their account size, their analysis, they can't use more than 40 pips, some 30 pips. And some, their style is 100 pips. They use 100 pips standard. And what does that mean? It means if you are using 40 pips and the market you want to trade is based on your position of your stop loss, is demanding for 60 pips or 70 pips. Even if the analysis is good to sell, you cannot sell it just because the position of that particular analysis did not permit you to trade because of your stop loss. You can't trade without stop loss. So because of that, what do you have to do? You have to look for another trade. You have to look for another trade. So anytime after all your analysis, you now want to place your trade or place order, and you see that the stop loss you normally use, which is your standard, which is part of your rules, the market did not allow you. What do? You don't trade that market at that particular time. You go and wait. So in the course of waiting, you might end up seeing opportunity to now enter the market. Just like what happened here. What happened here might not happen all the time, but it do happen. That's why it's a forex trading. Nobody owns the market. You understand? So that is it. So based on additional knowledge, I've talked about it. Based on decision on what to do this week. Now, looking at this particular trade. So there's possibility for market to buy up to this area. When you look at it, my trend line shows that what happened here, this is a fake out. The fake out turned to a ranging market, then return back into the channel. So what does this simply mean is that with the movement of my 50 EMA and my trend line, they are so close. These are one of the rules I use when my trend line is conforming to my moving average. Then I have additional assurance of the market direction. So what am I saying? I'm saying that this market still have more buy to somewhere around here. So when the market approaches my moving average, then it's a daily time frame. I can make a short sell to somewhere around here to cover this. So, and I'll be expecting a buy, which is the major reason why this analysis was done all the way from here. So I'll be looking for a buy. So when I'm making a short sell somewhere around here with a daily time frame, you measure it, let's say somewhere around there to somewhere around there. That's 75 pips. That's money. That's money. Then take my profit, then wait to see whether the market will come back to this original buy order to place my buy, or look at my moving average for 200. Probably by the time it's going to return back to this sell level, my moving average might have crossed up above this sell order and be somewhere around this price level of the last sell before this sell. So as a result of that, this will be giving you at the end of the day a head and shoulder, inverted head and shoulder. So for those that have eyes to see, so sometimes this is how I place my analysis for expectation to be met. Can you see inverted head and shoulder here? So I put this structure down and I expect the market to move this way. Buy more, then sell to give me the second shoulder. So when they give me the second shoulder, I enter a long buy. The sell I will enter here is a short sell, or rather still make a short buy. But this short buy will not allow my profit around 73.80. I can put my take profits like tomorrow is Monday now, around 0.7356, and the moment, because I always leave the tolerance for market to do the rest, because one of the targets I always have is not to be too greedy. I go for small targets. So if I envisage 73.81 for buy level and I put my take profit for 73.59, so the market like let it come to here, I've make my profit and I walk away. I go and wait. Then when it gets to this area, then I look for my sell. So like I said, the sell can come back to this price level, but due to technical analysis and the market structure, it might not come here again. It might be this particular area is going to get to. And if you place your order here, that means it's going to deny you of that entry. And it might be when you are busy, when you are not on system, because I am working. Forex is not only thing that I do. This happened to me last week. Gold, gold do me shege. Gold did me strong thing last week. It escaped my entry 3 times. Gold escaped my entry 3 times just because of where I place my. And as I speak to you, gold is just like 10 pips away from my entry level till this particular moment. Meanwhile, I spot that level and it's a key level. but it failed to. So these are lessons that become experience and that will prevent our decision when next we are taking trade. So, like I said earlier, it's a form of teaching and a review. So, you've seen what to expect in this particular card shelf. So, let's look at other pair. Now, imagine this is a sweet buy trend. This is a sweet buy trend. NZD card already chop off and build a strong support. I already have my cup. 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 You see it? I already have my cup. At all, I'm expecting market here. I'm expecting market here. This is good for somebody that has good account. This is a daily time frame. If you have good account and sacrifice enough stop loss, with what we have here, I want to measure the stop loss. The stop loss is 158 pips. You can sacrifice 158 pips. It's good for you. Or let's say the market already analyzed its support area where a sell has turned to buy. Let me show you this. Look at this support here. That's exactly where the market is right away. Drawing out other supports. You see the market already tested them. Can you see? Market already tested those supports. That's the reason why it's for those that have eyes to see that we see. Markets need a good eye, a very good sight. Can you see? So based on the movement the market is making, but if serious momentum comes in, it's it might not do that before it make that serious move. Look at this now. Why do I draw this? I'm showing you the possibility of what can happen next. When the market buy, it's not going to stop here. It's either it stop here, sell, then continue the buy. So looking at this, what you have here is why I place the market to reach here before it corrects, then continue, is that I have a support here. So this can reject or cause a rejection, then continue the buy. Or better still, just break it to this area, then pull back to somewhere around there, then pull back to somewhere around there. That's the second scenario. Then make that buy. That's second scenario. So what am I trying to say is that this is a buy trend analysis. This market already pull back. It already give you a bullish candle. Reverse bullish candle already pull back again This pullback, if you check your 4 hours time frame, it will be visible to you. Then, so this market as it is right away is a good entry. Is a what? A good entry. Now, if you don't have up to 154 pips, this is the support level here. This is the fresh support level here. Then you can place your support here, which means your stop loss can be somewhere around there. Your stop loss can be somewhere around there, which is 100 pips. This is daily time frame. For you to make use of 100 pips, and let's say you are looking at 1-to-1 ratio, that means you are looking for 100 pips in return. That's from here. You are looking for 100 pips. Meanwhile, some might be looking for 1-to-3 ratio. That's you are looking for about 300 pips. And based on the expectation of the market, it's expected to hit the take profit before the final zone. And with this, it shows that you are going on a long term, because this is a daily time frame. This market cannot accomplish this in one day. Even it might not accomplish it in 1 week. It depends on the market movement. You understand? It might even further come to this area again before that move will continue. But basically, this is where eyes are on. All eyes is here. All eyes is here, and it has come already. It has come already. There was a news on card, I think on Friday. That news favors card, but the news effect came in after the news. Some news take effect immediately. When that news came in, I entered the market immediately, and based on my stop loss, it hit me out before it now take effect. So these are additional lesson. It's not all news that respond immediately. Some news would have responded before the news. Some immediately the news take place, it will respond. It happens a lot on US dollar. Why some is after the news, like what happened to card. It was after the news it happened. So this is a lesson that even next time when there is strong news on card, I will take my time to wash out. I will pay attention and before I enter the market and still use my stop loss. It's part of the losses. That's what led to my losses on Friday. Meanwhile, if I had used something like 70 pips, because I think I used about 40 pips. I used about 40 pips stop loss and it hit me out. You understand? It hit me out. I actually make the recovery on gold. But the truth of the matter is that analysis fail. So I use fundamental to trade that. There's no crime. See, it is an additional skill for you to know how to use both strategy, both fundamental and technical. It helps a lot. You will always see something in the market. You will always see. Sometimes both the fundamental and the technical will conform. You understand? So though it's advisable that some that cannot, make use of good stop loss or who doesn't have the confidence should not trade within the news when you know that because after your analysis, you go and check, is there any news on that currency you are trading? If it is yes, look at the time. So you try and close your trade or protect it. If the market has gone in the direction and you are waiting for more profit, and protect it so that if at all you go against you, it will be a break even. You understand? But otherwise, you close your trade, stay away from the market. After the news, you come back. So based on the analysis I've touched so far, there are some other confirmation that market is a buy, and that is my RSI. So my RSI is already on a buy with a pullback and it's above the 50%. So I expect the buy continuation to continue. You understand? I expect the buy continuation to continue. I didn't go to 4 hours time frame because I'm looking at the structure itself is so clear on daily time frame. So I think we have about 3 pairs, but let me go and see gold to be the last pair. So it will be an hour class. Gold, my friend. So that is good. I have gold on two different. There are trading opportunities around, but you can't trade all. Just look for the one that is good for you. You see this pullback now. See this pullback. Based on this sell, the last sell is 50%. So the pullback is already on the discount area. There's no how this market will not sell. Fine. Then let me say there's no 100% assure. There's no 100% what's it called analysis. But this structure I'm looking at, I am going to sell it immediately. Why? Based on, we are still talking about technical. I'll look at the news. If there is no strong news on JPY and GBP on Monday till maybe around 2 p.m. This is a daily time frame. I am going to look for a sell on this guy because this already in a discount zone 0.618. Aside that is on a fresh level, which if I go down to 4 hours, it will be on my moving average. You can see my moving average and look at this candle. Even without coming to this 4 hours time frame, I've seen the sell 4 hours additional confirmation. If anything happen and this market come and break my stop loss somewhere above my 200 moving average, then something serious is wrong. At least 95% assurance of sell on this particular trade. This is a good opportunity you can have. Anytime, any day, serious news come, let's say NFP news comes in or FOMC comes in, after that week, news change market structure and give trading opportunities for technical traders. That's what I came to realize, and that's an opportunity, additional experience. News change market structure and give trading opportunity. It is news that will cause this serious move. And when it causes it changes the structure of the market because it broke this area to give you a fresh level, then make a buy. Now, at this point now, anything from here, this guy is already 50%. Now, let me come here. I'm looking at this particular trade now. Looking at this particular trade. Now I'm looking at this last buy. I'm looking at this last buy. So anything here, if I make my sell around here, I'm looking at least 38.2%, which is somewhere around here. That's 150.71% price level. If you look at it, if you look at how many pips, that's over 100 pips. That's if I use my take profit here, that means I'm expecting half of this move. That's 50%, which is 150.287. But I'm putting my take profit here to 150.697. Now, why am I doing that? To be on the safer side, I don't want to be too greedy. That's why I didn't put it on 0.5%. Aside that, look at this support. This can cause a rejection, which could be a waste of time. Imagine your market sell all the way down here and now move like half again. You understand? So that's another support, and this is another support. Same on 0.38. So my take profit area is safe somewhere around there. So for those who have eyes to see, this is a sell opportunity, a golden one. This is a golden sell opportunity. From this sell here to this buy, then to return. At the end of the day, this analysis will be giving us an inverted head and shoulder that has possibility of coming down more before a boom based on daily time frame. You understand that now? So this is not where I'm going. I'm actually going to gold before I spot this analysis. So as you can see, and if you look at ICT, based on this structure, ICT we already place a block for you here. ICT will not, some of them, or majorly, they can also make a sell here. But you see this area, they know it's a fresh level. There will be a lot of buy order here. A lot of buy order. There will be a lot of buy order here. So if anything happen here, so they expect the market to sell here, then trigger the buy. You understand? So that's the advantage of you having those skills. And that's the reason why sometimes I do say to fellow trader that all this analysis, maybe ICT, technical, fundamental, ICT, candlestick chart, price action, that we check them, all of them point at the same thing. They all have something in common. And if you understand this, you'll not be confused. Fine, I make a commitment to learn several things, to be special, to have my unique way, to be an excellent trader. You understand? That's the reason why you know I make a lot of commitment to learn several trading principle, analysis, and the rest. But on the long run, looking at everything all together, I see that all of them have several things in common. They all have several things in common. So with that, I now come to realize that there's no cause for alarm. Everything is fine. The analysis are real, and I'm okay. So that is it. I was going to good. You see, it's what I was telling you about good the other time. Good failed me. Now, after good refused to come here, I switched to 4 hours time frame. If you look at here to this area, it's more than 1 week. 1, 2, 3, 4, 5, 6, 7. For about 2 weeks now, good has refused to test that area. And I was expecting good there. Now, see me see trouble. Look at this area. This was another area where I expect gold. When I say gold did me strong thing, my other block was somewhere around here. And gold came to this area and failed to come to this area before he made that sell. And from then, I've been struggling with gold. It refuses. The only time I make money on gold was when I scalp. Meanwhile, scalping is not my trading method, though I scalp. Like I said, I try to learn all these things. I try to learn everything. So when I'm readily available, I scalp. But for someone that is working, don't want to be distracted, don't want to be checking time every time, you know, you go on higher time frame to do your analysis and set your things and walk away. Understand? So based on what God is trying to show us here, I'm suspecting that God is preparing a buy move again. Look at all this channel that God came to touch and return. You just come, rush down, touch gold, rush down, touch gold, because it's highly volatile. So I'm looking at gold coming down. If gold can come and test this zone again and break here, then I'll be expecting gold to come to where we have here, because there is more buy on gold. But after all this correction, it's going to give trader more clarity for the buy. So if you are trading gold, trade with care. It's volatile. It's not for people that doesn't have big money, unless you are a scalper. So that will be all for this week. Watch the video, click like button, subscribe, enable your notification, and we meet to testify to how God has helped us to make huge profit in this business. So thank you everyone. See you next time. This is Future FX. Share this page, invite your friends, click on subscription button on the YouTube, click likes, leave your comments. I'll be happy to hear from you guys. Thank you everyone. Bye.